Joining us today is Ron Birnbaum, CEO of Pear Tree Financial Services. That's a leading provider of mineral exploration financing in Canada. Now, Pear Tree has been at the forefront of helping Canadian mining companies raise capital through innovative tax structures like flow-through shares. Well, today we'll be discussing Pear Tree's recent proposals to the federal government, how new tax rules are impacting the mining sector, and the outlook for critical mineral exploration, which plays a key role in the green energy transition. Ron, thanks very much indeed for coming in.
Pleasure. Good to be back.
So it's been a few months since the new alternative minimum tax laws have been enacted. We've had the budget a couple of weeks ago. I'm wondering whether we have already seen visible impacts, good or bad, on the flow-through share market and just mining financing overall.
Global investors can buy into the junior exploration market in Canada. So the flow-through regime actually provides a incentive to global investors that no other country has.
Yep.
But that said, it's still very challenging. And the recent changes in the law, especially the alternative minimum tax, AMT, and the more recent increase in the capital gains inclusion rate, has put a lot of uncertainty into the market and has had downward pressure. But to the credit of the Department of Finance federally, we've been successful in convincing them, based on historical data, that the negative consequences on the junior space, especially, would be very significant. And they've recently published draft legislation back just very recently, August the 12th, which mitigates some of those impacts, which we can talk about if you'd like.
I'd like to talk about that. I mean, the two tax credits that you are bringing into question here was that the mineral exploration tax credit and the critical mineral exploration tax credit, right? That's fairly new, the second one.
The second one is very new, and it demonstrated, and it was actually a very good exercise for us in showing Department of Finance the real data that was, when the critical mineral exploration tax credit came in 2022. Up until then, we had not done any critical mineral exploration financing. It was largely 90% of all the financing was precious metals.
What did the data show?
The data showed that an individual who under the new AMT rules, so recognize the alternative minimum tax rules, for those who don't know, limits the availability of tax deductions and credits so that you cannot drive your income to a zero after tax or zero income for tax purposes. And the 2022 amendments or introduction of the critical mineral exploration tax credit resulted in, within 12 months of the introduction of a budget night in Canada, over $350 million of financing were completed. We did 225 of that. And when we showed this to finance, we said, look, the same people, we've been at this 15 plus years. There's a very small group of individuals who fund most of the exploration in Canada. You have a list of those individuals. You can have the CRA verify what we're telling you. The person who before would have bought $300,000 of flow can now only buy $200,000 of flow. You've now lost about $300 million of jobs. And they bought into that. They actually we got their attention, and the most recent legislation does back out the AMT inclusion.
In a moment, I want to first ask you something that's on my mind with regards to timelines for spending. You've been pushing on this point as well. I mean, mining companies forced to spend some money in a particular time parameter. Any success on that? Because that's also a very frustrating thing, especially if you have wildfires all over the place, as we've seen with Canada. Some of the production and exploration can't really go ahead. What's been the issue on that?
Under COVID, they extended the timeline. They recognized that sites were closed down. With respect to fires that have had a major impact on the ability of issuers to go out and spend the funds that they raised a couple of years ago, especially, the federal government, in spite of regular lobbying, has not bothered to extend the timeline for fires. Interestingly, we've had three instances in Quebec where Quebec says, we have extended, you have to apply. So, but the conundrum for a junior is Quebec says, we'll give you another year to spend that $1 million. But federally, they haven't given the extension, so you're offside federally.
All right, let's go back to the capital gains. And
Sure.
the percentages here is the thing that really fascinates me, and how you get around that. What's been the impact on that front, Ron?
Well, first of all, any of the issuers that could have raised money before the cutoff date. So the introduction of the capital gains inclusion rate in the spring budget had a cutoff date of June the 25th. Any transactions closing after the 25th would attract a higher capital gain. The challenge for flow through is if I buy $100,000 of flow through, and I'm typically paying a premium to market. It may only be worth $80,000 because I'm getting a newly issued share from Treasury plus a tax value. So the issuers will issue the shares at a premium. That's one of the benefits of flow through. It's less dilutive. But that said, for tax purposes, I just wrote a check for $100,000, and my basis for calculating the capital gains is zero. So before I wrote a check for $100,000. I would include $50,000 in, if I sold it for $80,000, I'd include $40,000 in my capital gain, and now it's 2/3 of $80,000. And so the deal economics are far worse for flow through. Yeah. We've asked the federal government. We know they're not going to adjust by industry. But
you've done some sort of advocacy around this,
What we've said to them is the double hit for flow-through subscribers is that the capital gain under flow-through is also added back into AMT. And so there's the issue. So we've said to them, why don't you just, if you want to charge 2/3, charge 2/3, but don't also limit, add back the capital gain and further reduce the ability to buy flow-through.
We're going to have to leave it there. Well, Ron Birnbaum, CEO of Pear Tree, thanks very much indeed for talking to me.
Pleasure. Thank you.